Hello, and welcome to Bambu Wealth Tech Digest, where I cover the weekly happenings in the digital wealth market. My name is Ned Phillips. Let's dive right in. Our first article today argues that the wealth management industry needs to retain the positive changes brought on by the pandemic. COVID-19 forced everyone, including the wealth management industry, to embrace technology. And this new familiarity and growing comfort with tech is completely changing advisor-client relationships. Now, financial advice is being delivered in a more personalized and holistic way. Zoom calls have provided direct links from the home of the advisor to the home of the investor. And many in the industry feel that this intimacy has broken down barriers and helped them gain better insight into the needs of their clients. Common ground is more visible when everyone is working from a home office or a kitchen table. The entire shift brought about by the pandemic introduces an informality that many would like to hold on to. For some firms, this means continuing to offer virtual options. For others, it may mean retaining that relaxed and personal atmosphere when they resume in-person business. Whatever the case, Deloitte notes that critical business workflows are being digitized to accommodate these shifts. Many remote workers in the industry can now onboard new clients and open new accounts virtually. And this can all be done while managing risks and disclosures linked to KYC and SEC regulations. Our next article today claims that the decades-long race between big banks and Fintechs is coming to a head. JPMorgan is the biggest bank in the US and a major player in the global financial system. During their fourth quarter earnings call on Friday, JPMorgan CEO Jamie Dimon says the last 5 years have been good. But he also says that he sent a list of company valuations to the bank's operating committee. Companies on the list range from PayPal's $280 billion valuation to Apple's $2.1 trillion. These giants are either catching up to or already have surpassed JPMorgan's $422 billion market cap. And in Dimon's own words, we should be scared shitless about that, end quote. In response, the firm is planning to almost double its financial advisor force. Over the next 5 to 6 years, JPMorgan is considering hiring as many as 4,000 more advisors. Dimon also disclosed this week that they might add more than 1,000 new clients overseas. This would eventually generate an additional $1 billion of international revenue via the commercial bank. They're also focused on grabbing up new businesses in international markets, with 2020 being one of its best years ever in Asia. And according to Dimon, JPMorgan will be much more aggressive on acquisitions moving forward. But will all of this be enough to keep up with its rivals in wealth management? We'll all be watching as the competition continues. Finally today, Bloomberg experts point out that disruptive fintech startups and low interest rates around the world have made it a difficult 10 years for banks. But many have managed to survive and thrive by creating services to move or manage money. Large full-service brokerage firms have seen wealth management revenues soar. This has been a result of consolidation in the industry, as well as growing personal wealth. In fact, personal financial wealth has almost doubled since the financial crisis of 2008. Commercial and consumer payments are another growing portion of bank revenue. This is especially true in Asia, where transactions are expected to double in the next 4 years. Passive investment strategies have also seen explosive growth alongside the rise of indexing. And retail investors used to account for only 10 to 14% of the market. But since the advent of commission-free trading in 2013, they've grown to represent 20%. Big brokers are seeing equity volume lag, but that doesn't mean trading is off. According to Bloomberg, that means that individual investors are using more leverage. And in a zero-rate world, investors are choosing alternatives like real estate and cryptocurrencies. Changes and challenges will continue, but wealth management and retail trading certainly seem to be taking center stage. Thank you for watching Wealth Tech Digest. Again, my name is Ned Phillips. I'm the CEO of Bambu. Over 300,000 people have reached their financial goals using Bambu's One Easy platform to help streamline portfolio management. If you'd like to join a panel discussion with other industry leaders, reach out to me on LinkedIn or email me at ned@bambu.co. Thank you.